Good afternoon, folks. How are you guys doing today? Okay, so let's flip on over here to our charts. Got our recording going. And today's been a pretty back and forth type of day. Nice trades, but all scalpish, short-term type of stuff. On our larger time frames, let me show you what's going on here on the weekly time frame. We've got a move into the 76.4% Fibonacci retracement from the main move to the downside. You can see it's retesting that level. Pretty rapid retest here, but overall this should keep the shifting going on the daily time frame that we're starting to see a little bit better at this point. So right now on intraday charts, really we could see things push either way. So it's coming down to watching the momentum on the smaller intraday time frames. And to start the day, we had slower momentum overall on the upside on the time frame charts, and the tick charts had faster momentum. So we saw a little bit of a variation here between the momentum on the time frame charts, which you can still see up here, and then the momentum on the tick charts. This gave us some short setups right away out of the open, just with a two-wave, 1, 2, 3 measured move type of thing, 2T. But then things got a little bit trickier. We've got a little bit of a phoenix here, and now we're seeing a bigger version coming into the upper channel. So we've got resistance again here at the upper channel where we're getting a little bit of a larger 2T trying to form on the tick charts. Going back to the time frame charts, kind of widen this up a little bit here. Here you can see the earlier correction where we have basically the same type of pattern that's currently forming on the tick charts, formed on the time frame charts. So this momentum is really still trying to shift here, but it's very much a tug of war between the tick charts and the time frame charts. And so it's really mostly a scalper's market currently. Kind of been going back and forth between, here's the original downside move on the ES, then on the NQ, we had the little phoenix kind of went into the 2T on the NQ again. And again, now this is what we're repeating on the larger time frame of the S&P 500. So we're really going back and forth, these 2Ts, phoenixes. And again, we're just coming up onto resistance again here on the S&P 500. So we've got that same pattern happened earlier on the NQ, happening on a bigger scale here on the S&P 500, and we're coming right into the same type of zone that we saw up here. So it's been a pretty whippy market here, slow, whippy, but good for day trading, nice scalpish moves. As we look at larger time frame objective, I'm not putting a big bias on action right now because the momentum on the upside is still pretty strong. We saw over here where there was a decent amount of a shift that allowed for a flush to the downside, but the rapid move back up into the upper channel. So we're basically struggling with that upper channel resistance right now. That's what's trying to round things off here intraday. Initially going into the day, I was looking for a little bit better action for some more correction, trying to get some more rounding off, but we just aren't getting a bigger shift. We had a little bit of a upside swing for this correction, a little bit of a downside swing for this correction. Usually that'll try to round things off a little bit more, but not quite getting it. We're going to see how this reacts off this next high on the S&P 500. It's going to be the next scalp zone as we come into the afternoon. But again, we have to keep in mind that some of these smaller time frames, especially the time frame charts, the momentum is now picking up here. So when things do try to turn around, a lot of times they'll struggle. They'll have a harder time really pulling back as quickly. We saw that this morning with that first two-wave measured move here and how it came back into the middle of the congestion, but it couldn't sustain a bigger move because the momentum just wasn't there. It just was not turning around enough to bring in that larger correction. So even off of this level of resistance here, it can struggle to try to get turned around just because, again, this momentum here is stronger than average. Even though it's shifting on the tick charts, now we have the reverse scenario of where the tick charts are slower than the time frame charts. So on the time frame chart now, we're seeing that reversal of fates where the time frame chart is actually picking up momentum. So it was more gradual this morning, and now it is stronger. So we have them fighting here. And when you've got a fight, it means that your setups are going to be higher risk, tend to want to be more aggressive, use more aggressive trade management on them. When they line up, that's when you've got the best strategies because you can get the stronger moves in whichever direction it is ending up breaking as long as they're working together. But right now they're not. They're really fighting each other here. So this afternoon is going to continue to be a little bit trickier because of that. I don't think that we need to get too aggressive quite yet on looking for short side setups past just being the scalpish type of setups because I'd want to see things starting to round off more on both the tick charts and the time frame charts. Just like we saw happening about a week and a half ago, they were rounding off on both. Both the tick charts and the time frame charts were slowing on the upside, and that's what helped bring in that strong flush to the downside. So when we have them lining up, that's where our risk is going to be the lowest, and we'll have the strongest potential for really strong moves. So what you can see here on the Russell is on the Russell, we had the larger flush on the daily chart, and it's pulled up about halfway. So this still leaves room because of the momentum. It can go and do a secondary move back up to this high. Sometimes it will hold it, pull back down to the low, but I'd actually prefer it to try to pull back up just because that will bring in some better sell setups again up at the high versus if it tries to pull in here, it's more likely to be choppier. Might get some shorter flushes to the downside, but not as much of a larger setup. So that's what we're looking for here on the Russell. If it can manage to hug the fans, that can bring in another drop to the downside here into that 50% fan. It'll take a couple of days for that to try to play out though, and we need to get things shifting on both the tick charts and the time frame charts in order for that to manage to be able to do that. Let's look at some of the other markets. I'm going to pull up, we'll look at some of the precious metals. Platinum, of course, we were following over the last couple weeks. Jerry brought it to our attention about 2 weeks ago, and then we got the nice continuation over the last week. Let me grab a chart of that here quick. I need to change our time frame here. We've got a nice actual little avalanche intraday. Let me show you first the daily time frame. So daily charts, we were dealing with a double top, and we had a nice two-wave measured move into that high. So that was the first main level to trigger some of the reversals. Notice it looked a lot like, so if I put it on a 4-hour chart, you'll see it looks a lot like what that S&P 500 did going into the morning. Turned around, gave the short setup going on to the first. Nice move down, and then here was our continuation breakdown. So here's the short we were looking at just about a week or so ago for the continuation breakdown. And then watch how this played out. We had a nice two-wave move and then a 2B. And the 2B shifted the momentum. So this triggered the turnaround as we went into this week. So now at this point, things are looking more like a range-bound type of move. I'm going to go back to that 4-hour chart here. So we're going into mostly just a trading range. I don't have a larger bias on this at the moment right now for another setup. So I'm just going to keep it kind of in the background. Watch and see if we can get momentum starting to shift again. Gold, haven't really done a whole lot on here. We had the momentum shift at the lows. Of course, we were watching this breakdown here. Here was the momentum shift, similar to that 2B type of setup. Nice two-wave move up, a good flush to the downside off that measured move. And now this again is looking more range-bound type of action. So I think risk is going to be higher in here again for the next couple of days as well, since we don't have a nice two-wave move or anything like that to bring in another setup at this point. Now Harvey's been following wheat here. On the larger daily charts, I'm actually going to move even this up to the weekly. You'll see we came into a really good level of support here. This looks a lot like gold did on the daily time frame. A nice avalanche, increased momentum. So we're getting some good reactions off of this on the shorter time frame charts now. Here's the daily chart. You can see the nice three-wave drop with momentum shifting. But because of how hard this hit lows on that weekly time frame, it runs the risk that it can do the widening up now at this point. So here's our three waves kind of shifting each time, a little bit declining volume. And so this can do two waves up, but it can also widen up now because of how it was forming on the weekly time frame with the increased momentum. So I would be looking for more of the two-wave back and forth at this point. Main support still holding. We can get the two-wave up, but then I would expect the possibility of another two-wave reaction. And it just kind of depends on how strong that two waves up is, if the two-wave reaction can do more of a phoenix, or if it's going to try to pull back again a little bit stronger. If it has more of a shallow move, it's more likely to go and do a two-wave back down. If it's stronger, more likely it can try to go into a phoenix. There's actually a lot of things that are looking a lot like this one does on the 4-hour chart, but they're looking like it on the daily chart. We don't have a lot as far as Forex pairs really doing much. I know a lot of people are watching the euro because of all of the back and forth with Brexit. The euro and the pound, of course. So euro here is just hitting basically the typical smaller impulse move, blah, blah, blah. I can't talk there for a second, but it's just the smaller impulse move hitting upper channel resistance. That's kind of shifting things in here. But really, any shift on a smaller time frame is going to try to guide this at this point. The daily can go either way. It's kind of looking like it wants to try to pull up a little bit, but what we see a lot of times on this, I'm going to show you guys the weekly chart here, is that with this weekly time frame, we're dealing with this first main move off of highs where things are just kind of going back and forth. And there's not a predominant bias for a break because you'll see stronger upside, slower downside, but then it goes to slower upside, but then it's still slower downside for the channel. So this channel as a whole doesn't have a larger bias for a break that's really strong. So what I'm worried about is that sometimes the shallow phoenixes and shallow avalanches, they can start out looking like this and they can start to break, but they'll start slowly and then shift and even gain momentum like that. So even though this is more gradual to the downside now, I'm concerned for the bulls that this can just do maybe a two-wave move up and then flip and drop. We see that a lot. It's a little bit more common when you get a steadier two-wave move down first versus what we saw here where it was more of a rapid drop, but it looks a lot like that. So if that happens here over the next month or so, that can bring in stronger selling once again on this euro. And it wouldn't take a whole lot to do it. Just a shift on this daily chart where basically we could get just like a two-wave move like that. And that could bring in the stronger selling. And usually what it'll do is it still starts a little bit slower, kind of like this, and then gains speed as it goes. So it can still lead people to kind of second guess it even in those early stages. So I want to see how this plays out with that. Be a lot more cautious right in here. Again, we can still get a two-wave move in here, but it might have a slower, harder time pulling up off of it, just kind of like it did over here. It tried to do that to start over here, but it just didn't gain the momentum when it broke down. So we'll see if it tries to do a repeat of that on the daily time frame here again now. I'm actually going to go straight over to the pound first. So the pound, we've seen a really good reaction off of that two-wave 1, 2, 3 move on the daily chart. A couple weeks ago, about a month ago, is where we were looking at them right here. The two-wave move, the pound yen we were also watching. And right now things are just getting messier again. So this is like the drop this morning on the S&P 500. You'll notice that it looks almost identical. I'm going to go down to the smaller time frame to show you that comparison. Right here. So you got the two-wave move up, and then the pullback, and then the sharper move back up. So this is where things start to diverge again, of course. Now we've got the bigger two-wave measured move on the S&P 500, but there's not a corresponding similar pattern on a larger time frame here on the pound dollar yet. That would take it where it would need to base out longer. And this actually went to a slightly higher high on the daily chart, whereas the euro or the S&P 500 didn't. So this move up is basically akin to what we're looking at here. Here's the move down, here's the move down, here's the move up, here's the move up. This is just scaled out a little bit further. I can show it to you on the maybe the 240. So here's the pullback, and then this just didn't go into a phoenix like the S&P 500 did. It just had the two-way pullback, and then it's kind of gotten really messy in here with all of the back and forth with the news this week. So right now we have a little bit of a pull for a break higher. I would just consider this to be a day trade scalp, as I mentioned earlier today, but for the most part, I'm not going to trade it because I don't want to be stuck in the middle of a news event right now. So I'm kind of sitting on the sidelines in a lot of the Forex markets at the moment. I prefer to trade the reactionary moves versus the primary moves on a news event. We got a nice two-wave measure move at the high that stalled that, and then here's the congestion. So this can easily push forward a little bit more here on the intraday charts. Weekly charts really are up in the air. There's no main pattern here. It's like halfway back down again, just like we saw on the euro dollar. This was a nice to be going into January. Gorgeous to be pattern here right into January. Trend placement wasn't great for it, but the pattern was still there. And so now we only have really one main swing up, and overall dealing with a widening wedge congestion. So higher risk zone in here for new trades at the moment. I would basically focus on just looking at what's going on the intraday charts right now. So we've got here's the 250 tick on TradeStation. It's going to look different depending on the charting platform you're on. But just watch for setups like this where you get your two-wave move, you get your momentum shift. It's a really nice Phoenix type of pattern. You're coming into, the 76.4 support, coming right back up into those resistance levels. That's actually coming into a target zone here in a second. But I would just stick to some of these smaller time frame setups and not worry as much about the larger time frame charts, and really be aware that in the current environment, any bit of news can really whip you around on this right now. The other one in play here is our US Canadian dollar. So last Friday, we were looking at this as striking main resistance. And the reason for that was, of course, because a lot of these bigger impulse moves had the exact same size. So we're right into major resistance, a little bit further, like 123.6% compared to the measured move on this Phoenix, which is the inverse head and shoulders. This looks a lot like what we saw on the pound dollar on the weekly time frame. So intraday, this has had really good follow through coming off of that resistance. Nice little avalanche, 1, 2, 3, and then the main support. So we're at a zone of kind of messier congestion. This is going to be, again, going down to a much smaller intraday time frame at this point because we don't have a larger time frame setup or main support or resistance level here. It's just a smaller little move right now. You can see that kind of with some of the other reactionary corrective type of moves. It's a pretty typical corrective type of start. So nothing that would tell me, hey, we've got another strong momentum move coming in here intraday. Certainly not a higher probability one. Dollar Swiss. Overall, I haven't seen a lot on Forex. I mean, that US Canadian dollar was really the main thing last week. The dollar Swiss was hitting the same thing, kind of a 2T, got the two-wave correction, and now we're kind of at a widening up zone. Even though it looks like a bit of a 2B type of pattern intraday here, it again is at a midway level. So it can hold here and go to an inverse head and shoulders. It's just not ideal timing for it. So watch like let's see, what's the best time frame on this one for this? I think at 250 is a little too small. Nice little momentum reversal there this morning. I'd probably go to about 1,000 or 2,000 tick. Here's the two-wave move to the downside. So we're just kind of widening up with just pushing these levels a little bit further, but not really anything at this point. It looks like we've got a widening wedge forming. So even that 2B is not looking that pretty when we look at it on a tick chart because it doesn't have the clear two waves to the downside. It just has more of a wedge to it. Aussie dollar is just reacting to measured move resistance. A little support here. Larger time frame again, not really too much interesting going on. What we are watching is basically the distance between the lows here to see if this can try to do a little bit of a kind of messy inverse head and shoulders. On the monthly though, it's again not awesome positioning. It's just kind of in a retest of the lows, but the risk is that it can try to do a two-wave move back to the downside. So you only have one main swing into this attempt at an inverse head and shoulders. So even if it tries an inverse head and shoulders, it might only go up just a little bit and then try to do a second wave down on the monthly time frame. So it's better if we see a two-wave move, like you get here, and then you get more of a head and shoulders because you're more likely to get a little bit of a bigger move off of it. Especially that would create more of a 2B type of pattern too. But that wouldn't happen until you'd be going into like 2021 almost, if that were to go with that same momentum. Be like the summer of 2020. We have some questions on looking at some other things here today. If you want me to take a look at anything in particular, please go ahead and post it in the questions box and we will pull them up and look at bonds here quick. Let me let bonds load. Hold on just a second, guys. I need to grab a drink fast. Okay, I'm back. Dry air, and I've been talking all day. We did a makeup session on League of Traders since I was at the expo on Tuesday. So we've got a question on Home Depot. So Home Depot had a 2T on the daily chart. And basically this looks a lot like things did back in February and March of last year in the overall market. Sorry guys, just don't want to cough on you. But here is Spider, monthly time frame, Home Depot, monthly time frame, almost identical here. So with this daily chart on Home Depot, what we are looking at is the two-wave move. It triggered the short. And as we were talking about a couple of weeks ago when we were looking at this short, a lot of times when you get these two-wave moves on the upside and then we get the short setup, after a week, week and a half or so, it'll try to do a continuation on the downside. But what we are seeing is that that just isn't developing very well. So I think part of the problem is that it didn't have much of an angle to the upside. And also, it already had some selling going into the day. So that might have put a little bit of a damper on this. I do think that overall, it can still continue to creep lower because of that larger trap here. So even though it's not a straight bull trap and then it didn't close right at the high of the day and then open lower, it still has a shot that it can go and kind of shift momentum and do another wave to the downside. So if you're looking at this on the downside, I would still continue to watch that as such on the intraday charts. But I need to see something that can happen with the momentum because right now, the way it's forming, you can kind of see, it's kind of hard to see here, but right now it's kind of holding onto the support, and I'd like to see that momentum shift again. So just like we were looking at earlier, where you can get these zones of congestion, like on the euro dollar, that can shift again. And that's what would need to bring that to the downside, but it would need to shift again on that intraday time frame. Adobe, actually, we were following Adobe this morning. Adobe is another one, very similar to what happened with Home Depot with the gap down, except this one has more of a bull trap because it closed at the highs of the day before the gap down. So what we had in Home Depot was, I'm going to show you on a 1 minute chart, we had a momentum reversal. So this was the pattern that we were looking at in Home Depot this morning. Some momentum reversal. I'll show you guys. We're not in League of Traders this morning. So it's basically this pattern, just flipped over. Actually, Karen did a good screenshot for me. Let me pull that up. So here was the pattern on Adobe. So Jesse was asking to get into more detail on some of these gap plays. So with the way the market is forming right now, what is happening is that we've got a lot of securities that have been moving strongly higher in recent months, basically since the lows off December. And I'm going to flip back over here to the daily chart. What we are seeing now is that with earnings and a lot of those things coming in, the momentum on these upside moves is pretty decent for the most part. Some of them are shifting momentum a little bit, but overall momentum on the upside is pretty average on a lot of them. And so what's happening is we're getting gaps to the downside, and they're pretty decent gaps. But because of the momentum on the upside, even though they're breaking the channels, what is happening is they don't fully get going right away. A lot of times they will go into these additional channels before they try to continue. So Six Flags was one, for example, that we were following a couple of weeks ago. So let me show you what that looks like. And this is what we're going to continue to see here on a lot of these right now. So she was asking to look at some of the detail on these more. And this is pretty typical of what we are seeing happening. We're getting the bigger bounces. Some of them are managing to shift momentum. So this has a 2T and then a blurb kind of retest the highs. So nice bull trap here. The gap is too big though to really sustain it easily the day of the gap. So we're getting corrective moves. And because of the momentum being strong on the downside, then the gap down out of the channel, some of these are forming corrections higher up. Some of them are forming corrections higher, lower down. And then they offer the continuations right now. And so with Home Depot, that was also the same type of pattern to watch for. It's just not doing as well of a continuation. So Home Depot on the, let me go pull up an intraday on Home Depot. I'm going to show you like a hourly 2-hour chart here. So this is that main initial move for the breakdown. And then it offers the continuation, but it only did the measured move for the first part. So this was the first main support, and then it's having a little bit of a harder time fully getting going. If this had had a two-wave move here, where this is the first part and then it did a second part, you'd probably have a better, cleaner channel move where it would be a steadier move than it is right now. So right now it's trying to do it kind of in two parts. What we would need to see again for the continuation is this to be the first part, this to be the second part. So really for it to start to get going here as we head into early next week, and then it can still do a larger measured move. But that's what we would need to see for that to happen. So back to Adobe, actually just let's show you the live action here. So on Adobe, clear that. On our 1-minute chart, what we have is a pretty decent move off the low. So this was kind of like your main target level with the momentum reversals right here with the two-wave move. This actually went for 3, brought it back up into the previous high, we're kind of getting a shift. It's trying to go for a bigger Phoenix at this point. We were looking for that possibility for a bigger Phoenix right here, but it's still trying to do it a little bit into the afternoon. I think that's still possible. Today is triple witching. We've got all of everything expiring. And I am probably not going to do a trade on this in the afternoon. I would have actually liked to have seen it just hold with the two-wave move up and then gone into a Phoenix. Let's look at this on the 3-minute. So if this had held here and gone into a Phoenix, that's what I would have preferred, because it would have created just a slightly lower low, and then it could have even gone for like a nice two-wave measured move up. I'm going to show you guys the fans on this. I'm curious to see where these are falling here. So usually what I would look for on the Phoenix is on this 1-minute time frame. Widen that up there. Looking for the fans to fall at that 76.4. And can see it's kind of in that zone, but not really fully. If this had held that two-wave right there instead, and just held with a two-wave, it would have been more likely to have done kind of a steadier Phoenix. Do you guys see that difference there? So you have the two waves up, you'd have the two-wave correction, and then you would have the stronger two-wave up. So it's just not as good of a setup because it went for that third move. And the third move kind of hugged along the lower end of the channel. So it kind of rounds things off a little bit more. So that's the difference here on Phoenix. That's higher risk than the other way around. If that held at the upside target, well, it'd be right here. So let's go see what that price would be. I can even put a extension on here. Be about 259. Oops, I hit something wonky. Why not at the highest? Because I'm going based upon if it had held the setup that I would have liked to have seen. That's what I would have had as my target level. Now, because it's kind of shifted a little bit more, I don't know if it can go to that or not. This is what that would look like, and you can see it doesn't quite, it keeps scaling off on me. But if I remove that, went all the way to the high, you'd be looking at 260.5. It basically have to gain momentum on a breakout to get to that point. So what we would be looking at is it trying to do kind of a shallower Phoenix. And when we look at the time development now, here's the low, here's the high, here's the low. So your time development is 1-to-1. So it really should take off here if it's going to do the 1-to-1. Otherwise, it could base out longer for a 2-to-1 before it would try to go with more of a shallow Phoenix. So it would do a slower upside here, slower downside, and then gain momentum. If this had held here, that's a pretty average move. If it had based out here and then gone, you would have kind of a steadier move. It would be more of a measured move. and your time development would have been more like that. So that would have been the ideal time zone still for the continuation breakout, but now it's not. Now it's a 1-to-1 ratio as opposed to a 2-to-1 ratio. So if it had gone here, let me actually put that time development into here. So, oops, wrong one. I don't want gone. Fibonacci cycles. Here we go. If we went here, to add the 200 on here. What we would be looking at is this would be the ideal zone for it to take off. So it would have a ratio of, here's the upside, there's the sideways move, you would have that nice two-wave correction into the 61.8% fan, then the 76.4% fan, and then you'd have a stronger move, able to do a measured move. Usually goes up to 76.4 when it's a counter trend move like this, as sort of like your 90+% odds of hitting there. But as long as the momentum's the same, that would be the target level. And so that timing would have been good at here for a trigger. But when we go and take this and now move it to here, we are only with a 1-to-1 ratio of the correction to the upside move. So then there's a greater risk it could base out to 2-to-1. So that's the difference between why one is a little bit more preferable than the other, and basically how long it would take ideally to get going. So this is basically that first do or die point, and it's not really going. Yeah, well, my parents are hilarious. My mom is visiting us here in Tucson since I was at the expo, and my husband was in Jordan this last week. And so my dad tries to reach my mom by calling me. He's like, leaves a voicemail. Yeah, hey, have your mom give me a call. As opposed to just calling her phone directly. Maybe she's ignoring him. So funny. That's what that ringing was in the background there. um, that's the only phone number that rings through. Let's see, you guys. So the impulse leg was too much, too fast, and maybe exhausted. Um, yeah, I mean, it's a time development thing is what's going on. It just extends out like the better place that you would get the continuations happening. Let's see. Got some other questions here. Oh, thank you guys. Do I prefer pre-gaps or continuation after? You mean, I'm not sure quite what you mean there. I like both. Like I like to trade the day of the gap, and then I like to trade the continuations like a week and a half or so later. So wage here is another example of the gap where we had, this was one that had a really good move the day of. And then this is also one that, like we were talking about on Thursday, that can now kind of chop around for a few days. It can still push higher for like a longer swing trade, but it's probably going to chop around first before it tries to do that. Oh, pre or post earnings. I don't usually like trading gaps that might be happening right before earnings. I don't generally want to hold that into earnings. But if you mean like pre-market, like gaps that had earnings the night before, and then they're gapping the morning of versus gaps that have earnings the day of, right before the open, I don't really care. I mean, it doesn't make too much of a difference for me. So like if the earnings were yesterday versus if they were this morning before the open, I'm still going to be looking at both of those. A lot of times the day of, you might get some more immediate impulse momentum, but you'll find them both working pretty well. So for the gap, would you look for continuation a week or two out, continuation with the gap or against the gap? It can be either way. So for example, I usually will look for it with the direction of the gap, but there are cases it can go against it. So for example, like let's say you've got a gap down here. It'll pull up and then it might go into a phoenix and then offer a secondary move that will pull up and close the gap. That happens a lot if the gap itself has already been selling off and then it's coming into a major support level on a larger time frame. So the gap can actually fully exhaust it, and then you can get trend moves that will come up and totally close the gap. So like, maybe this move down here, let's say this closed here and then it gapped, and then you've got the turnaround. So if this was just a gap zone here, you would have a second wave move. It would extend it, and you might get a little push the day of the gap, but then start to close, and then you'll get a closure that can pull back in it. Or you can even see that happening where it will go here, maybe gap down into support here, pull up, and then continue and close the gap. So that happens a lot with like two waves down. That's why if something has already had one move down, you get a base and then it gaps down on the daily chart again. I'm looking more for a closure of that gap. So that actually happens on a much smaller scale here a lot right now. Let me see if I can show you where we might have recent examples. I'll just flip through a couple quick and see if there's anything to show you what I mean with that. Not really this, but kind of where you have the move down and then you get the secondary move down and see how that gap down. So you get two waves down and then it gaps and then it comes up and closes. It's a little harder to see on this. Let me show it to you on the time frame chart.
Connection lost.
All right, you guys hear me okay? All right, so for example here, you get the initial wave down, you get the base, and then it gap down again. So sometimes you see more extreme versions of that, and that will actually go for closure of the gap. So it might pull up, you'll get like phoenixes intraday, and it can look like an inverse head and shoulders. So that is a good example of how you will get a closure of the gap. On the other hand, if something closes up here, gaps down here, you might get the closure, but it might be steadier, and then you'll get the continuation of the gap. So sometimes you get the closure of the gap and then the continuation later. Actually, Lululemon, that was another one. This was a while back. Let's see. Oh, here. Here's an extreme version of it. Gapped down, had just the two-wave move. And so instead of doing the base like this and then pulling back down again, kind of did a more extreme move. Did the two-wave move up, then corrected, and then you've got the other way where it comes, gaps down, bases, and does the two-wave move. So if this has like a close up here and gaps down and opens here, it didn't quite do that. It sold off some in here, but it will have this congestion. So it will come up into the gap closure. So you'll get setups closing the gap, but then you'll also get setups going again in the direction of the gap. So I'll usually look both ways with that type of a gap. If it closes at the highs and gaps down, there might be a little bit of selling right away out of the open, but mostly I'm looking more for an upside move intraday, like what we saw with Adobe, where Adobe had a little bit of downside to start with. We were looking at kind of that little tiny avalanche here. Let me show you in the 1 minute. It had just like the little tiny measured move here. Sometimes this is a little bit more permanent now. Sometimes it will do a 1, 2, 3 and then shift and then go into phoenixes. That is a very typical pattern as well for gappers. And we've seen that a lot over the last couple of weeks. But I like to do that gap. So the gap closure to start with when you've got that stronger move up and then the continuation. So the first day you might get either way. It can go with the direction of the gap. It can go against the direction of the gap. Just like we saw, wage went with the direction of the gap. And then you'll usually see the counter trend move or counter gap move rather, and then the continuation with the gap. There wasn't a lot today. For them as far as like higher liquidity securities. Garden, of course, we were watching this morning, but there was no entry on it. It's too thin. Just kind of filled fast. But here's another example. See how it has the extreme move up to the upside. You've got a two-wave measured move, a little bit of a shift with a 2T here, and then it gaps down. So you get the continuation the day of, and then you get the counter trend move, and then you can get a continuation again. So this is really common right now in the market. This is a very common pattern that we are seeing play out in various forms, but the same general concept over and over again. And so for the current state of the market, I would continue to focus on this particular type of series of gaps right now, because that is what we are most commonly having because of the way the momentum moved off of the original lows in the market. So some of these are more extreme and they've already done them, but there's plenty of securities that still have the room to do the same strategy again. So we look at the Qs, 1, 2, 3, whoops. They keep flipping back and forth. So if we look at the Qs here, you could easily see how that could happen again. How we could get gaps down in individual securities, we could get the counter trend move, and we could get the continuation again. Many securities still have that potential. And so that's what I'm looking for right now in a lot of the gappers. So I'll have things on my gap list. I'll put them on my gap list, but I'll be willing to trade them either way the morning of the gap. And then I might be looking more predominantly toward filling the gap and then toward the continuation. But it kind of depends on how this forms. As long as this is strong, pretty decent average, maybe a little bit of a momentum shift, that's what I'm looking for. So we definitely have room for a lot more of those to start to develop here. All right, gang. Well, I hope you guys learned a good deal about gaps here in this class today. I'm going to go ahead and get our session saved, and it will be up for review. All you have to do is go to tonyhansen.com/Friday, and that is where the review will be. I will post the link there. A couple of you were asking about the market timing boot camp. Let me post the link for that. It goes into a lot of this stuff too. And here is the link to pick up a copy of that. So it's about 12.5 hours long, and it goes through all of the building blocks of price development that I use. So everything from time development, like we talked about today, and how vitally important that can be when it's trying to affect patterns like Adobe. Also goes into using some of the Fibonacci tools, trade management, trend development, 2 waves versus 3 waves, etc. And of course, momentum and volume too, how volume can impact your trades as well. So you can get that at tonyhansen.com/time. And let me I'll post a link with some more information on that as well. Let me grab that one for you. Yes, you can go back and review that pretty much anytime you want to. So as soon as you have the course, so you've got lifetime access to it. And they are on demand, yeah. So here is the link for that so you guys can see more information on it. There you go. If you guys ever need any help with anything, if you email Sarah at help@tonyhansen.com, she will help you out with any links you might need or anything like that. Mark, this includes all of the 6 videos from the live boot camp. It's just the recording versions of them. So there's about 12.5 hours total. It's not the original 5 technical signals you cannot trade without that was released back in like 2009. It's the updated version, and it also goes into time development more than that original version did. So it's basically the update for the original course that was way back in 2009, but it includes the textbook and the market timing playbook as well. So you have the downloads to both of those. And if you guys ordered the 2009 course like ages and ages ago, we have switched websites, but you do still have lifetime access to it. So if you're having trouble accessing it, you might have had a password change when we switched to the new site. So just email help@tonyhansen.com and they will get you back into it. Sarah will. You are very welcome. Does anyone else have any questions on this? Nicole, have fun with your birthday party. Oh, thank you, Jesse. It's actually my mom who's visiting here right now. My dad's back in Iowa complaining about the cold and the rain and the flooding. I noticed that they even have some bridges that have been taken out with the flooding with all the snow melting. It's just a mess. Actually, here in Tucson, it's interesting because the rivers have been flowing for weeks, and that is just really unusual because we had that crazy fluke snowstorm, and we've actually been getting a lot of rain. It's supposed to be in the desert, I know, but it's apparently a wet desert, at least this year. Y'all are very welcome. And League of Trader folks, I will be having the session this morning uploaded here this afternoon as well. Mark, even if you purchased it back in 2014, something in 2014, you should be able to get access to it now. So just email help@tonyhansen.com. And if Sarah has any questions, she'll shoot them my way as well. I actually have a new updated version of 3 Signs of Trend Exhaustion. 2. Let me see if I've got the link for that. I think it is. Yeah, it's tonyhansen.com/Orlando. And that has the PowerPoint as well as the new video. So if you have any difficulty accessing the old one, I can just swap you out for the new one, Mark. They're a little bit different, but same material. Yeah, just shoot her over an email. Just copy and paste this. Say, hey, Sarah, I purchased 3 Signs of Trend Exhaustion back in 2014. Toni says that I can update it for the new version. Can you please swap me out? It is help@tonyhansen.com. That's a good like Cliff Notes version course. Covers all of the main things. It's about an hour long. Yeah, let me type that for you again. It's just tonyhansen.com/Orlando. Orlando. There we go. Any other questions? Yep, I moved to Tucson this summer. just follow my husband around the country. He's like, oh, I married you because you can work from anywhere. Like, but I told you I don't want to leave at least the central time zone. I'm not a morning person, you guys. I know you hear me lament of this pretty much every day, right? Coffee is my best friend. You're very welcome, everyone. All right, I am going to head on out. If you have any direct questions for me, you can reach me at Toni@ToniHansen.com. You too, you guys. Have a great weekend.